to delve into the ever-evolving world of commodities and forex market, it is only fitting that we have with us one of the finest minds in the industry, a true veteran in the commodity markets, Mr. Gnanasekar Tyagarajan, founder, Commtrendz Research, an organization dedicated to help corporations navigate commodity and currency risks through strategic hedging solutions. With over 25 years of experience in the industry, he's been closely associated working with seasoned traders worldwide. He has been associated with Dalal Street, Dow Jones, Reliance, ITC, Scotiabank. He has expertise in trading cross currencies and bullion, particularly gold and silver. Mr. Tyagarajan has played a pivotal role in shaping risk management strategies for business across India and beyond. His insights are widely sought after, and you may have seen him share his expertise on leading financial television channels as CNBC TV 18, 18 Hour, Bloomberg, and Z Business. He's also a regular speaker at global conferences, offering deep perspectives on commodity price outlooks. Today, we are privileged to have him here, sharing his knowledge with us. Please join me in extending a warm welcome to Mr. Gnanasekar Tyagarajan. Mr. Sekar?
Thank you. Pleased to be here and with Mr. G. Chandrasekhar around. There's nothing much to talk about because whatever you're just talking about, my profile largely thanks to Mr. G. Chandrasekhar. I think he's the one who has shaped my career right from the beginning, and I must thank him for that. Delving on today's topic, it's very important because I think the world is very closely looking at what's going on in the currency markets. Currency markets are really having a tough time because a lot of unconventional things are happening. I'm sorry, I'm going to just put my presentation on. So, are you able to see the presentation?
Yes, the slides are visible.
Yeah, great. All right, so basically the world is grasping with what's happening on the overall macroeconomy and the tariff tit for tats that are going on, and this in turn having a big impact on the currency markets. And why the currency markets are having a major role to play as far as the metal markets is that I think all of the metals are priced in US dollars, and therefore when business is done in US dollars, in fact the reserve status itself is being threatened, whether the US dollar will continue to retain its reserve status and
Sound is not very...
Sorry?
Huh?
You asking something?
Yana, please go ahead.
Yeah, sorry. So the dollar's impact on the overall commodity markets, specifically the metal markets, is extremely important because when dollar strengthens, then it tends to weaken the buying power of the overall buyers. And similarly, the vice versa, when the dollar weakens, and then it tends to increase the buying power of market participants. So that's in brief, how the dollar's movement is very, very important on the metal markets. The way the trade disputes are going on, it's something which most analysts are unable to come to terms with because it's absolutely unconventional. The world hasn't seen something like this ever, possibly early 1900s or something like that, when there was a trade war kind of a situation. To the best of my knowledge, because I read something on those lines. So the modern day markets are unable to come to terms with what's going on the trade front, because till now, most of the forecasts that used to come from the big banks were all largely supply demand based. But this is the first time you have a policy decision, especially on the tariff side, that has rattled the markets completely. So that is something very new. So the outcome of how this is going to shape out is clueless to most market participants. And therefore, businesses which also rely on price forecasting to sort of understand where prices are headed, because many corporations who either consume or produce metals would definitely want to have some kind of a idea about at least for the next a couple of quarters, if not for the next couple of years, and that helps them keep the budgets in place and shape up what's going to happen, and how to plan for projects, the cost of escalation, all that is taken into account in the beginning of the year itself. So this year, which has begun in April, has been the most tumultuous year because we've started off with a lot of uncertainty and no clue how this whole thing is going to end, and therefore. Many analysts who conventionally come up with outlooks have been completely jinxed on what the overall impact is going to be on the currency markets. So I'm also trying to get some insights and then give you some outlook on the overall picture of the currency markets, and both the fundamental side and the technical side. And honestly, with Trump at the forefront, analysts like me have become redundant because his Twitter handle is making all the news. And he seems to be analyzing the markets much better than anyone else. So having said that, on a lighter note, I'm still trying to see if I can throw some light on what's going on and how we can get some kind of an outlook going. Basically, the dollar still remains an anchor. Overall. I think that's the critical thing that's still coming out. It hasn't. It's definitely shaken. It's definitely shaken, but it's still not. There's no other alternative, to be honest. Even though euro has been in existence for more than 20 years. It hasn't been an alternative for the world to change towards euro completely and do business in that currency. Chinese yuan is being talked about, renminbi is being talked about, but it's all going to take a long time. So if I'm used to pricing my goods in dollars, I think that will continue. That trend is definitely going to continue for a long, long time. I have my doubts in the next 2 decades that is going to change. I hope I'm not wrong. But the latest developments are that such major changes in tariff, especially US and China, and then US on a few other countries, has completely changed the dynamic. So it's become news flow driven right now. So every news that comes out of the US is being very closely scrutinized to see what is the kind of impact that it's going to have overall on the commodity markets and specifically on metals. We've seen that precious metals have taken off a completely different direction because, again, as a safe haven, it continues to keep finding a lot of takers. But my sense is, once some kind of a settlement or some positive news comes on tariffs, it will lose its safe haven status, and a lot of correction is due. So this de-escalation of tariffs is the final event that the market is expecting. I think the bond markets have the answer for this, because the bond markets started going down. So that hit the US government in a big way because when many of these countries were investing in the US treasuries, suddenly pull out, then the US has to service the debt and pay up, which is not possible because that will result in huge borrowings. And I think that's the reason why, one of the reasons why Trump would have put the pause button and held on to tariffs for 90 days, and maybe it might continue doing it for another 90 days, for all you know. But yes, this is something very new, which most market participants are completely clueless about where and how it's headed. Everyone is only trying to understand what's going on and what will be the impact. But I think it's difficult yet to put any kind of a number at this point in time. But quickly on the metal dynamics, I'm not going into all the metals, but specifically taking copper here, because it's being talked about a lot because of the EV boom that we're seeing. I follow it very, very closely because I work with many corporates, helping them on the procurement side. Therefore, the supply demand numbers are very, very important. We're seeing that it's more or less balanced at this point in time. The production has risen a little bit lately to compare year on year, and the consumption on the other side more or less remained the same last year. But what we're seeing is mine production is not going to increase as much as expected, simply because there's a lot of environmental permissions and all that. It will not catch up to consumption going forward, specifically in the EV segment. We know that it's just the passenger car segment alone that has contributed to a huge amount of demand. If trucks and various others, EV related segment demand picks up, then demand is really going to shoot up for this particular metal. So coming back to why I did go there, because it's very clear that the demand for metals, especially copper, is very significant, and it's going to play a huge role in the electrification and in the way the world changes from fossil fuel to the alternative energy side. So the currency impact or the overall macroeconomic impact that we see on metal markets, is clearly having a big role to play here as far as price forecasting is concerned. So you can see some of the forecasts that have come. In fact, I wanted to list out a lot of other forecasts that have come. Many of them have changed their views, and the dollar view that they've had last year is completely different than what it was this year. And I must say a couple of things the market is ignoring. The fact that when Trump took over in the month of January, one of the first policy notification was that he was starting a sovereign wealth fund, just like Saudi Arabia. So his goal at that point in time was to ensure that the deficits that they're running with different countries, like especially with China, can only be brought down when the dollar comes down in value. So we've seen a sell-off, a big sell-off right from that time in the dollar, and it's come all the way. So maybe this sovereign wealth fund has been used to sort of sell the dollar and bring down the value of the dollar so that the deficits automatically get adjusted. So from a peak of 110 or thereabouts when he took over, we are right now at around 99. So that's a significant dollar depreciation that we have seen globally. And ideally, it should have boosted metals, because the dollar value as it falls boost the commodity appetite. But that's not what happened, because the trade war as it is extremely negative for the overall economic sense, and copper being a barometer for overall weakness or strength of economy is clearly falling prey to that, and it couldn't take advantage of this dollar fall that we have seen. Ideally, this should have taken under normal circumstances, if trade war hasn't if it didn't happen, we could have crossed $11,000 long time back in LME. I'm talking about the LME copper. But that didn't happen. On the contrary, it fell so sharply because of the trade war concerns. But if you can see this chart, it has tested those long-term supports near 8,000 odd dollars. And we've seen a very sharp bounce from there as the news flows started trickling in when he gave that 90-day reprieve. But another interesting thing that I also need to point out is the funds, speculative funds whose appetite is very huge and they trade in these metals, had a very huge long position in the month of late March, because before the tariff were to begin, I think there was a lot of activity that was happening, a lot of buying that was happening, so that they don't fall short of the commodity for the next how many ever months. But that's what we're seeing again now. Since this 90-day reprieve has come, there's again being a lot of buying, so that they prepare themselves for the next 3 months and possibly even buy more at this point in time. So from 8,000, it's quickly jumped to 9,300 odd dollars. And I think by the time the extension is going to fall due, it could again test $10,000 or so on LME. But on the dollar front overall, I think we're seeing 96 is a potential level where it will come and find a lot of support. Because once some settlement comes in or some positive news sets in, the dollar is going to strengthen again. And I think that's a sign, that's a time when I would sort of expect metals to again have some weakness setting in. So this moving to dollar rupee quickly. So this is a chart, what we're seeing here of the USD INR right from 1973 onwards. So it's been on a depreciating path so far, and the RBI has ensured that every time it appreciated to some extent, it would come and intervene and ensure that exporters get a good deal all the time. But this will not be the case going forward, because the US is very clear on bridging the deficits. And in fact, they've labeled India as a rogue currency simply because we constantly, according to them, it's manipulation, but as far as RBI is concerned, it's managing the currency to ensure, both exporters as well as inflation doesn't soar. So both sides, they keep intervening. But in general, they keep the rupee depreciated so that the exports get benefit. But like I said, because of the new management, the new president is looking at the dollar very differently. I think he wants the dollar to weaken as much as possible. So more or less, I think we have seen the peak as far as USD INR is concerned, where it hit around 88 or thereabouts in the month of March. From there, there's been a very sharp appreciation. I think this appreciation is going to last now. So the days when exporters continue to just leave the rupee open, uncovered, I think those days are over, because the dollar as a currency will continue to weaken as we go forward, and even though there is some positive news that might come, things won't be the same as far as the dollar outlook is concerned. So I think with that, let me hand it back to you. Yes, Bina. Thank you.
I would like to thank Mr. Gnanasekar for such a lovely presentation. He has taken so much pains and have really weaved into his currency market, into the metal market with the impact so beautifully, and it has been really enlightening. It has been many metal forums. I have not seen this currency and forex topic was ever included. I think it was a great idea by Mr. Chandrasekhar that we should have such topics which are going to relate to the metal markets. Thank you so much for it.